This could change everything. And what I mean by everything, well, it's these 50-year mortgages and portable mortgages. Mortgages have been in the news a lot lately. And let's dive in and talk about why and the pros and cons of this 50-year mortgage and portable mortgage. What are they? Why would they use them? Why would they be good? Why would they be bad? Let's check it out. All right, so a 50-year mortgage was just proposed by President Trump earlier this week. So is it good? I mean, number one, that is a long time to pay off a house. Right now, the most common mortgage that we have is a 30-year mortgage, with a lot of people choosing the 15-year mortgages. So 50-year mortgages, that means you're still paying on your house when your grandkids are probably in college. Second thing about that 50-year mortgage is if it's structured currently like a 30-year mortgage in terms of the way interest and principal work, for the first 15 years of that mortgage, you are primarily paying off interest. So what does that mean? That means if you took a 50-year mortgage and you rock and roll it, and then you sell your house in 10 years, in a typical mortgage, you're gonna make money on two sides. You're gonna make money on the equity gained by appreciation in your house, and you're also gonna make money on the principal that you've paid off over those first 10 years. But with a 50-year mortgage, you're gonna really just make money one way, and that is by the appreciation of your house in those first 10 years on that 50-year mortgage. Because why? Because that principal has barely been touched in a 50-year mortgage in that first 10 years. So why would we do it? Why is there even talk about a 50-year mortgage? Well, the big word on the street right now, right, is affordability. And what does that mean? Right now, it is just tough to get into a house, especially if you are a first-time home buyer and you don't have a pocket full of equity as you're coming to buy that house. You want to keep payments as affordable and as inexpensive as possible. And one way to do it is to extend the length of that term. So does a 50-year mortgage accomplish that? It does. Does it accomplish it drastically? Well, I guess drastically is for you to choose, right? Because what it really does, take a $500,000 house, you put 20% down, 30-year mortgage versus a 50-year mortgage. That 50-year mortgage, it's gonna be about $150 to $200 a month cheaper than a 30-year mortgage, but you are gonna pay a lot of interest. So the pro is, if you're a first-time home buyer looking to get in, number one, it's gonna make your monthly payment be more affordable. And as America sort of is what it is, we are a payment society now, right? Think about going to the used car lot. They're not asking you, how much do you want this car for? They're asking you, hey, how much do you want this payment to be? And so as America, that's where we are going with homes. Even with new build communities right now, a lot of times new build communities, it is not necessarily, hey, what is your price point on a home? It's sort of, hey, what is your price point per month? So number one, it's gonna make your payment more affordable. Number two, if we're arguing for it, very few people actually hold on to their house for 30 years and end up paying off their mortgage in 30 years, right? More than likely, you're gonna stay in your house 8 to 10 years, and then you're gonna circle over, sell it, buy a new house, and all that good stuff. So the likelihood that a 50-year mortgage actually makes it to term, it's very few and far between, not because somebody's dying off, but just because someone's rocking and rolling, they're moving on to the next house. So could it help that first-time home buyer get into a house, make some payments, build some equity based on appreciation, and then roll over? Absolutely. But it's still 50-year mortgage. The cons, right? Again, interest. Banks are gonna make a ton of money. Again, because it's 50 years and not 30 years, that interest rate on the 50-year mortgage, it's gonna be slightly higher than a 30-year mortgage. Just like a 30-year mortgage, the rate there is slightly higher than the 15-year mortgage. So that's my thoughts on 50-year mortgage. I get both reasons why and why not, but at the end of the day, do I think it's a good idea? I don't, but sort of is what it is, right? Then portable mortgages have been floated around as well here in the past few days as well. What does that mean? My understanding is that it means that you can take your mortgage with you from house to house to house. So if I'm here at my house and I have a 2.99% interest rate, in today's world, I'm basically what we call a rate lock, right? I'm probably not selling my house unless I really have to, or have some life circumstance, because I have a 3% interest rate. And right now, if I jump to any house, I'm gonna double my interest rate. But let's say if I had a portable mortgage, then I could actually move to a new house. I could take my 2.99 interest rate with me and go there. So on the surface, it sounds awesome. Now in real life, what's gonna happen is, let's say if I have my house that I bought 4 years ago and I have the 3% interest rate, I bought it 3 years ago for $300,000, right in the sort of mid-COVID world. It's now worth $500,000. I now owe $150,000. So I can take my $150,000 mortgage with me to my new house, but there's a strong likelihood that depending on where I'm moving, why I'm moving, I may need another mortgage, right? So at the end of the day, you may end up with 2 mortgages. Now, will portable mortgages work? Will this get out from idea to actually maybe? It might, but to me, portable mortgages probably are gonna have to have some oversight committee, hand, right? And that hand may be the government, which again, we can argue that, but that also sounds like there may be some fees, rates, and all that good stuff that go hand in hand with that. So portable mortgages sound awesome on the surface. I think there may be a way to make it work, but that's probably for someone higher up than me. So that's my quick sort of thoughts on 50-year mortgages, portable mortgages, 50-year mortgages. I get the both yes and no, why I would do it, why I wouldn't. I don't think I would do it. That's just a long time. That's a ton of interest. That is, that's making a $300,000 house, $900,000 at the end of the day. Portable mortgages, I get the thought behind them. I think it's awesome if it could be done. I just don't have faith that it could really be done. So hopefully this helps to provide some clarity or just to sort of provide some questions and thoughts for mortgages, where we go. At the end of the day, it's all about affordability for people these days. It's much harder to buy now than it was 5 years ago. Definitely way harder to buy now in terms of affordability than it was when I first got my house 20 years ago, first house. So hope this helps. And if you are looking to see what else make Greenville fun and awesome, check out this video here. We will talk soon. See ya. Bye.